Simplicity is the most difficult thing to secure in this world. It is the last limit of experience and the first effort of genius. George Sand. We work to find simplicity each and every day in following price movement. How do we do it? Well, we look first and foremost for weekly vertical crossovers. We had one at the end of this last week, and we are watching as the markets continue to move ahead. We'll get to gold in just a minute. That's where we had the weekly vertical crossover on. But first, let's go to the S&P 500. What do we see going on there? Well, we're starting the week with 1.30% up. Now, where I'm seeing on my screen after market trading is also affecting that some. How did we start the week off? Well, we had a prior red down candle this week so far, 1 day into the 5-day candle. Little wick on top, solid green candle with a wick on the bottom. What does that show us? It's a slowdown in the down movement. Price percent oscillator still going down. Derivative oscillator losing upward momentum, but still positive. Remember, price percent oscillator has not crossed over. We just had a down week last week. What do we see on the 2-day chart? Now, that last 2-day candle finished drawing on Thursday, so the latest 2-day candle is complete now. It represents Friday and Monday. And what do we see going on here? Well, we have a red down candle, little wick, it appears, on top, yes, and a long wick on the bottom, solid red. And again, we see it plumbing a lower depth. The candle itself is small. Price percent oscillator's lost some of its downward energy, but that derivative oscillator still sinking. Of course, that comes from the up movement on Monday. We look at the half-day chart, and that's where we see up movement on Friday, and then in the morning on Monday, and then a doji. Lots of indecision with a really down shoot there in the afternoon. But again, a recovery. So we see the price percent oscillators negative, but heading up. Derivative oscillators turned positive. So again, as we start the week, we still see some downward pressure. But again, haven't had a crossover yet. What could happen? Well, we could continue to see downward pressure, and we could see a weekly vertical crossover, or we could see on the 2-day chart, it could recross before there is a crossover going down on the weekly, and we'd have a 2-day recross with the potential for jumping into an up move. In the meantime, we're not going to worry about it. We're going to let the markets sort themselves out, and we're going to do what the charts tell us. Please keep that in mind. We let the charts tell us what to do. The special training we have for our students today, and how do you become a student? How do you become a subscriber for free? Just go to chartingwealth.com, put in your name, email address. That list is never spammed, never sold. Every day you get a special training from us. The training today is a good one. It is on liquidity, a key to your success. I want you to have that, understand what that is all about, how it is so important that you be liquid. If you are in your practice trades buying and selling things that aren't liquid, you are very much limiting yourself. One reason we never, ever, ever follow anything like a mutual fund is because of, in many of those, the inherent illiquidity of those. We don't care to be in anything that is illiquid. We want things that are liquid. Why? Because when things don't go your way, you need to be able to close things fast. Liquidity is the difference between the bid and the ask. It's like a dollar bill. How liquid is a dollar? Well, if you get a dollar in one store and go to the next store, they take it as a dollar, right? It is totally liquid. How liquid is a car? Well, you buy a brand new car on the lot and you drive off and it loses thousands of dollars. Is that liquid? No. You might go sell it to someone else, but you take a huge loss. So liquidity is so important. It is part of the key to your success. You want to understand it? Take that free training. If you're not a subscriber, sign up for free. Let's go on to the Qs. What do we see there? Looking a little similar, although we do see looky, what's happening? Trying to cross over, going down. Even though it was an up day, we see the lagging indicator, that is the price percent oscillator, trying to push through. Now, this is just the first day of a 5-day candle. We don't have a crossover going down yet until Friday. So we'll watch, we'll wait, we'll see. We do see the derivative oscillator's already gone negative, but you got 4 days, and if there is up movement, you'll see that price percent oscillator pull right back through. So we'll wait and see what there is to learn as we move throughout the course of the week. We see the 2-day candle, of course, heading down. We had that 2-day crossover going down back on Tuesday of last week, the 8th of September. Price percent oscillator gaining downward momentum. Moving down, not gaining downward momentum, actually losing a little. It's a derivative oscillator. It's gaining the downward momentum. Go to the half-day chart. What do we see there? We really see a sideways slide there, don't we? We see where things bottomed, actually, on Friday afternoon. Then we see things popping up. This is aftermarket trading. We see things popping up in the morning, and we see things popping up in the slowing down in that up movement in the afternoon. So that's where we are. Again, we're using the live charts. I've sort of changed things up a little bit. I was using the delayed charts and waiting till about 4:15, but I'm using the live charts now. So we'll see on that half-day chart, it can get a little confusing. It is continuing on for the after-hour trading. So let's look at what's going on bonds. We see bonds are up just a little bit in after-hour trading, 0.02%. What do we see when we look at the weekly chart? We see where things have sort of stabilized in bonds, trying to move up. We see the price percent oscillator still negative and heading down. Derivative oscillators almost flat. We go to the 2-day chart. What do we see? The price percent oscillator's heading up, hasn't crossed over going up yet, but we see where bonds bottomed all the way back on Monday the 31st of August, up for 4 days, sort of sideways and down for 4 days, and this latest 2-day candle up. And again, we'll just wait, see what there is to see here. It did pierce through a sort of crappy 2-day trend line, but derivative oscillator still barely negative. We go to the half-day chart. What do we see there? We see, of course, up movement in the morning and then a petering off of that in the afternoon, but right there on that half-day trend line. So again, waiting for bonds to settle out just to sort of see what's going to happen. Are we going to see things really rotate over and hammer back down a half-day crossover going down? We might, but look at that 2-day chart trying to head up. We'll wait, see how things sort out. It's been sloppy. We've not been doing anything with this sloppiness, so we'll wait and see. Again, that's what we do. We follow the trends. If the trend's not there, we don't do anything. We see gold up for the day and about 0.75% or so. Look at the price percent oscillator trying to pull away from the red signal line. We do have a green up candle that is forming, a little one. We'll see how that continues to form. Again, gold has been sliding sideways, tending down. We see the derivative oscillator gaining downward momentum. We go from the weekly to the 2-day. What do we see there? We see that we've gone into the 4th day of some upward movement. Let's move that out of the way. Hadn't hit the high that we hit on that prior 2-day candle. Derivative oscillator losing downward momentum. Price percent oscillator still heading down, not super strong. We look at the half-day chart, and of course on the 14th we saw some up movement in the morning, pairing back in the afternoon. After hours is trying to move up a little bit. So again, we'll continue to watch, see what there is to see there. Gold hit its recent high back on the 10th in the morning. So we'll watch, see what there is to see and learn. We do have that weekly vertical crossover in effect, and we'll watch and see how that plays itself out. The big wave is going down despite the fact that we start the week off up somewhat. So we'll watch, wait and see. We talked about this when we were calling the weekly vertical crossover. The only crossover we've had that failed us this year was the one in June where gold tried to move down. This one is a little different than that. We didn't have the derivative oscillator at the crossover negative. It was negative at our crossover and is continuing to be negative and gaining energy. We do see that the price percent oscillator is trying to pull away from the red signal line. It was fairly laminated on the last one. So again, hopefully you put your profit and loss bands in there. We will continue to watch this. I hope so much that you practice trading this because they're important things to learn. That's where we are, folks, as we end the day. We appreciate you being with us. If you haven't purchased our book, Charting Your Way to Wealth, we have a copy for you. We also sent out to everyone who is a subscriber to our texting service. We sent you that latest notice of a weekly vertical crossover going down in gold on Friday. Hope you got it. If you live in the States, I'm sorry, our texting service doesn't work overseas and you're not a subscriber, become one. You need to text to the number 33222, one word, Charting Wealth. It's actually two words, but you jam them together. Charting Wealth. Text that word to the number 33222. God bless, my friends. All the best from the whole team at Charting Wealth World Headquarters.